It is time for Three versus Trish. The Nasdaq, not the index here, the company. That's what we're talking about. It's in a firestorm over the Facebook IPO. The rocky debut prompted a whole lot of finger pointing at the exchange and its ability to handle IPOs. Shares of Nasdaq OMX, they're down almost 6% since Facebook's rocky debut last Friday, and the stock was already on a slide. So in today's Three versus Trish, the Nasdaq is front and center for us. We have Josh Limpton on the fundamentals. We have Andre Julian watching the charts. We have Tim Bigham with the options trade. All right, beginning with you, Josh, there was word yesterday that Facebook executives had been talking to the NYSE about potentially changing exchanges. That was thought to be unprecedented. What is the latest development there, and how might that affect the stock?
Well, let's take a step back, Trish. Analysts remind us that this is one of the world's obviously largest exchange operators. In the competitive landscape of equities trading, it's a top player, reaches about 20% of total cash equities volume. It's also got a strong position in options trading due to its ownership of the Philadelphia Stock Exchange. And, of course, it's one of just two venues where large companies are going to go public. Now, interestingly, you bring up what are analysts thinking? What are analysts telling their clients right now? Well, right now on the street, you got 11 buys, 8 holds, and 0 sells. But interestingly, you're seeing analysts adjust those ratings a little bit. Raymond James analysts, for example, just
yesterday. And they're
yesterday,
adjusting it based on Facebook, correct?
Exactly. They downgraded the stock to market perform from outperform because they saw these elevated risks due to these technical glitches from the Facebook IPO. Now, their point was, although Nasdaq's legal liability here is only $3 million, there's some concern that the board may be willing to provide more compensation, and more generally, that investors might actually approach the shares, of course, more cautiously until you see some resolution to these issues, Trish.
Okay, Andre Julian, let's talk about this stock from a technical level. As I pointed out, it saw 6% since Facebook went public. This was supposed to help Nasdaq, instead having the opposite effect.
Yeah, I mean, it really is. If you look at this chart, this is a technician's dream. You could teach a class from this chart. I mean, if you look at it, it peaked at 27.34 back in March 27th. It broke down through some key levels of support. It broke down to that 25.40 level, and then it failed to hold that. Then it went to the 24.40 level. It failed to hold that. All the indicators were turning. The moving averages were turning down. The 100-day moving average, the 200-day moving averages, it bounced right off that 100-day moving average. Once it gapped down on May 2nd, down below that 24.40, it's basically a car going down a hill without brakes.
I know, but you're talking about long term. You're talking about what it did on May 2nd. I'm curious, what's it going to do now? Now that there's some fundamental reasons now, in addition to technical, to be concerned about this one. Where do you see the stock going?
Well, yeah, I mean, we can talk about the fundamentals, but I'm only looking from a technical point of view. I think it's consolidating right now. It's heading down to $20.30, which is its next level of support. Let it consolidate there, reform, look for some of the indicators to turn. But until then, you have your next level of resistance at $23. If it doesn't break above $23, you're looking at going down to its yearly low. And if it breaks that, forget it. I don't know where it's going to go. $15 for all I know.
All righty, Tim Bigham. A lot of people were looking to short Nasdaq because they couldn't short Facebook, and they figured, you know, given what happened, given what transpired, maybe another likely play would be to short Nasdaq. What are you seeing in the options market, and what is your trade right now?
Yeah, fear, and more fear. Put-call ratios off the charts. Implied volatility, the highest level ever. So to paraphrase Warren Buffett, you know, buy whenever they're fearful. We're selling some of the puts everyone is buying. June 21 puts at 60 cents. We'll be a buyer down around 20.40 if it gets there. If not, we keep some rich option premium.
Okay, that's an idea. Thank you so much to the whole gang. Appreciate it.